Do you want to make money with crypto, but you don't have the time to trade, or you don't have enough conditions or can't afford to have a mining farm? Then I'm going to show you some other ways that you can generate passive income with crypto. These include 5 passive income sources. I'm also going to show you which platforms you can use, some examples, the risks and profits for each one of those passive income sources. And if you stay until the end, I'm also going to show you something which is trading automation, so about trading bots, which you can use to mitigate some of the risk while still making some semi-passive income. I'm also going to show you how you can automate long-term investing and how to find rates and evaluate investments. Hi, I'm Hugo, and in this video I'm going to go over some of the best ways that you can use yourself to earn passive income using crypto. So the first one that I'm going to cover is Centralized Lending, or CeFi, because it belongs to the centralized finance category. There are companies and exchanges which will allow you to lend and borrow your assets, whether they are stablecoins, altcoins, or other tokens, and they can be considered CeFi due to being centralized finance platforms. So the main advantages when compared to DeFi, which is decentralized finance, is the fact that most of said CeFi platforms have some sort of insurance or fund to protect lenders from potential losses, such as X, borrowers not paying back, and of course it is easier to liquidate or exchange your assets to stablecoins or even to withdraw them entirely from the platform. Qcoin is a very good one for USDT lending with some of the highest rates available out there, and some of the exchanges allow you to simply lend by just holding your coins there, while in others you will need to set parameters for it. So for example, in Qcoin you can go there and you can activate an option which is auto lend, and it will allow you to compound your capital, meaning that you will earn interest over time and it will accumulate, and you can set some parameters there with the auto lend feature, and it will do that for you without you ever needing to constantly visit the site, while others you will need to put the settings and then go there daily to make sure that your money is being lent out. Or you can also use some bots such as CoinLend or CryptoLend, which will connect with your exchange via API, and then you can use those bots to automate the lending process. Anyways, you also have other platforms which are Celsius and BlockFi. These are 2 examples of the first, where you can get fixed interested rates by having your funds there, and on Bitfinex and Poloniex, which are 2 exchanges, you are able to do what is called margin lending with variable rates and terms, usually providing better returns overall when compared with platforms such as Celsius or BlockFi, which have fixed rates where you, for example, deposit USDT and you get something like 10 or 13% every year. Alright, so then we have DeFi Lending, or Decentralized Lending. So DeFi stands for decentralized finance, and it is the complete opposite of the previous option, at least when considering the lenders but also the borrowers. You do not have to stick with a specific platform, but rather connect your wallet with a compatible DeFi Lending dApp and start lending in a trustless manner without intermediaries, and using lending protocols which usually work on top of the Ethereum blockchain, but nowadays there's also others that use the Binance chain. You also have for Polygon, which has reduced fees when compared with Ethereum. You have for Phantom, AVAX, and a lot of other blockchains and protocols. So rates are variable, and there are multiple assets available to lend or borrow on different platforms. You can use a website which is called DeFi Pulse to find a lot of those platforms, but you can also take a look at them, for example, on CoinGecko and also CoinMarketCap. Some of the most popular are Yearn Finance, you also have Compound and Cream Finance, and there's a lot of platforms. There's also another one which has popped up, which is Venus, which is specifically for the Binance Smart Chain, which has a very interesting rate for the BNB coin. There are potential risks of flash loan attacks, so these are sorts of hacks where hackers get access to the funds, and there are also sometimes exit scams depending on the platform. The latter is easier to avoid by using trustworthy platforms, but there are also possibilities for hacks, which are really never out of the picture. Another thing to bear in mind is that with DeFi CeFi, you will need to pay some transaction fees in order to participate. However, those may vary depending on the protocol that you are using, and a lot of the times you can also get higher rates than when compared with CeFi. Then we have Yield or liquidity mining, and this starts with DEXs, which are decentralized exchanges that need liquidity to enable trades between different coin pairs. By providing liquidity to a liquidity pool, you would be depositing 2 coins. It could be on a 50-50 ratio or 1-to-1 ratio. There are some examples such as PancakeSwap, which have a lot of different options with variable rates, but you also have Uniswap as well, which also has some options too, where you will get pretty much a piece of the pie regarding the transactions that are made on the platform on those specific pools or pairs. The reward is equivalent to a percentage of all transactions made between the pairs of a pool, which means it also depends on the trading volume that happens to be on said day for those pairs. Liquidity mining also provides some rewards in the platform's token. With this strategy, there's a risk of impermanent loss, and this happens if the price changes a lot compared when you first started providing liquidity, and sometimes it can be offset by trading fee rewards or by earning additional coins for one of the pairs. Another very good way to earn passive income but also support transactions on a specific blockchain is by staking your coins. Staking is when you delegate or lock your crypto to earn more coins. Instead of using the proof of work mechanism, you are relying on proof of stake, which in turn does not require any sort of hardware mining or high electricity usage, which is very common with proof of work, also known as mining. When considering staking, you should not just look for the highest interest rates, but also consider the project as a whole. While high rates sound good on paper, a lot of those coins will be more volatile and you can incur in capital losses while still having your funds locked for staking. It can be done right from your wallet if it supports staking for the coin you are looking at. Another simple way to stake is by using staking products on exchanges such as Binance, where if you go to the Binance Earn section, you'll find there some staking options along with other products which are very similar to staking in this sense that you still receive a interest rate, but you will get your funds locked for a specific period of time, and that's about it. As with all these strategies, you should think first before investing just because of the rates. You should consider what you think might happen in the future. So if the price of a specific coin is going to go up or down, you might consider staking if it's going up or if you expect it to go up. So there's a lot of stuff that you should consider as well, such as the market movements and whether or not the coin is volatile. But of course you could also do other investment options, which include stable coins. Alright, so now we have dividend tokens. Some cryptocurrencies will allow you to receive rewards in the same coin by just holding for a certain term, such as KCS, which is the KuCoin token. With that specific coin, you get a percentage of the profits made from trading fees on that exchange. In this case, it would be on the KuCoin exchange. So of course, this has some similarities with even providing liquidity because you are still getting rewards from the trading fees on that specific platform. And sometimes it can be also similar to staking, where the similarity would be that you still get some sort of dividend, hence dividend tokens, or you still get interest over your crypto. There are still currencies which exclusively work like this. However, the most common right now are exchanges providing investment products such as savings, staking, and all of that look very similar because you still lock your funds, but they have different interest rates. Lastly, we have trading automation. This is the one that I am the most interested and invested in. So trading automation has more variables at play, but nonetheless can be considered passive or semi-passive depending on the strategy that you are using and is being implemented. Essentially, you are counting on crypto trading gains, whether they are capital gains if the price increases or if you are betting that the price is going to go down. But instead of opening all the orders manually, you set the values on a software and it will execute trades for you. Or you can also go the other route for the long term, where you get a software that will rebalance your portfolio if you are adopting, of course, a more long-term approach. There are a lot of trading bots available for free and even paid ones. There's some which are very popular, such as 3 Commas. There's BitsGap, which is more for grid trading. You also have Pionex, which aggregates the volume of 2 exchanges, but at the same time it is something like an exchange where you will be needing to send funds there. You also have BitUniverse, which is from the same company, which is Pionex, but this one will allow you to sync with a bunch of different exchanges via API keys, which means you don't need to send funds there if you already have them on your exchange, as long as they are compatible. You also have KuCoin bots, which also work within the exchange, which is KuCoin, and all of those have different strategies available. Most of them connect with the exchange via API keys, which gives you a lot of control over the permissions that the bots have to use your funds, so you can set that up so that the bot only has access to reading your balance and executing the trades, and it cannot withdraw. As for long-term approaches, you can keep using the same tools but with different configurations, or using a rebalancing tool such as Shrimpy, which can also be considered a portfolio management tool, and this will keep the same ratio of funds allocated to specific coins. So if you have a portfolio with 3 or 4 cryptos such as Bitcoin, Ethereum, ADA and Litecoin, some of those might go up. For example, if Litecoin increases in value, then that percentage which was allocated to Litecoin will increase, and then the others will decrease when compared to the total capital that you've put in. So what will happen is that according to the settings that you've used on Shrimpy, it will rebalance. So if you have more allocation to Litecoin, it will sell a bit of the Litecoin to keep the same allocation that it had previously, and then it will put some of those funds on the other coins so that it keeps the same percentage regarding your initial investment. The automatic rebalancing can be done by using intervals such as monthly, daily, or even price changes. As with intervals, it would mean that you are pretty much just rebalancing when there's some time passes by. So at the end of the month, you can choose to rebalance, which means again that you will keep the same percentage or the same ratio for the coins that are on your portfolio. And with the price change percentages, it will mean that will rebalance once there is a price increase. So if the price of Litecoin increases in 50% or 10% or 5%, it will rebalance and sell a bit of that coin to put on the others which are lacking. If you liked the video, consider subscribing for more videos like this. Check out the description for some lending, staking and trading platforms you can start using today to earn passive income. Let me know which one you thought was the most interesting. Are you already invested in one of these income sources? And if you would like me to cover some of those in more detail, I'm happy to do so. That's it for this video. Thanks for watching, and I'll hopefully see you on the next one. Bye bye.